Hey everybody, welcome to the House of Fi. If you are new here, I am Wendy and I am one half of the House of Fi podcast. And if you're returning, welcome back. We are so glad you are here. We are all about helping moms and dads on the journey to financial independence. We want to help you save more, spend less, build wealth, and dump debt, and doing it all while living a joy-filled life. Well, it's been about 4 months since we have been here, and if you kind of want to know what that's all about, check out last week's video where I give you an update. What initially began as a 2-month hiatus turned into a 4-month mental health break, but I am back. I'm feeling really well, and I'm just glad to be here. I have missed all of you, and for our viewers and supporters, we just appreciate you so much, and we are glad to be back in the saddle and here with our May net worth update. Let's dig right in. All right, I'm going to pull up my screen here and you can follow along with me as we go. All right, as you can see, back when we started tracking, we started our financial independence journey in 2016, early 2016, but I only started tracking in May of 2017. So as you can see, in May of 2017, really the only asset that we had was our house at the time. We no longer have that house. We did sell it in July of 2020, and with that we use that to pay off all of our consumer debt as well as begin investing in real estate. As you can see, we also really had zero savings whatsoever, zero emergency fund, zero after-tax investment, zero retirement for myself, and we had only just begun investing in Kurt's retirement. We were in a dire situation. So even though on paper our overall assets were $670,000, pretty much almost all of that was tied up in our house. So the last time we spoke was at the end of February. So this was our February net worth. Again, no primary residence. We had our 5 rental properties in Muncie, which the total value of all of those are $175,000. And that's going to stay pretty current. The housing market where our properties are is pretty hot right now. We spent $25,000 on each one of those houses on average, and so we've got a little bit of equity in there. As you can see, our after-tax savings investment was $43,360. The big portion of that was my EXP shares that I just learned of at that time. And at the time of the recording, the value of those shares were at an all-time high. And so if you see the difference between the end of May and February, the biggest portion of that has to do with the reduced value of the EXP shares. We put a little bit more into my retirement. That's now up to $531. And then as far as Kurt's retirement goes, we've seen a nice increase there in those 3 months from $110,000 to $125,000. So overall, even though we had some pretty big losses in the value of our EXP shares, we still saw a positive increase in all of our assets of $1,000 in those 3 months. So I am not upset about that at all. I'm really happy with the growth of Kurt's retirement accounts, and I am still very pleased with the value of our after-tax savings. Our assets are, at least our liquid assets, are at an all-time high. So I'm very, very happy about that. All right, now let's look at our liabilities. As you can see, our liabilities back in May of 2017, the biggest part of that was our home. We also had car loans, and then the second biggest portion of our debt is our student loans. These are student loans that carried me from both my undergrad and law school. And then my husband's student loans were from his undergrad and his master's degree program. This debt right here, this $53,000, that actually originally started as $80,000, and this is very, very old IRS debt from 2007 to 2011 when I first started in solo practice and did not quite get the hang of setting aside taxes. Also did not have my company, my firm set up as it should have. We quickly learned our lesson, bit the bullet to pay for a CPA, learned how to set up my company to take advantage of better tax planning as far as that goes. So we learned our lesson, but this old debt has been following us for quite a while. So as you can see, when we began this journey, we were in over $1 million worth of debt, which when I say that can create a pretty hopeless feeling, I truly mean that. And so if there are those of you out there with big debt, we get it, we understand, we know that feeling of hopelessness. And the reason that we do, a big part of the reason that we do these net worth updates is to not only track our progress, but to show you in just a small amount of time the difference that can be made when you're consistent about both paying off your debt as well as amping up your investment and your retirement. Mortgages. We still do not have a primary residence mortgage, but we do have a small mortgage on our newest property. The other 4 properties are in a commercial loan, and that is going down slowly but surely. Our student loans are staying because those are right now in a deferment as part of the CARES Act. So those are staying at 0 payments right now. We're taking advantage and putting that extra cash flow right now into our savings and investing strategies. The IRS debt as of the end of February, we had gotten that down to $20,000. It is now at almost $12,000, and a big part of that is when we get a tax refund, it goes to that bill first. And so we had a really nice refund for 2020, and that went to that old bill first, as well as the monthly payments that we're paying on it. So we're really happy to see this. I am hoping that in the next year that will be 0, which would be really, really nice. That has been around our necks for quite a while. So as of May 31st, we've seen small reductions in the balances on the mortgages on the rental properties. Really no movement on the student loans, but a nice big change in our IRS for an overall positive change in our liabilities of over $8,000. Not too shabby. All right, so now if we're going to look at our overall net worth progress from the end of February to the end of May, when we initially began this journey in May of 2017, we had a negative net worth of almost $350,000. Today, well, as of May, the end of May, our negative net worth is now only negative $127,000. Soon we'll be at 0, and I'm really, really excited about that. But what is really nice is that in that 3-month time frame, we've seen a positive change in our net worth of $9,400, making the overall positive change in our net worth $221,000. That's in just, goodness, 4 years, you guys. And so again, when I say that if you're starting out late, if you're starting out with a lot of debt, if you're starting out with no savings whatsoever, just please just start. It can seem overwhelming, but all you got to do is start, make a plan, be consistent, and just keep at it, and you will see the changes. I am hopeful that these net worth updates are encouraging to you. If you have not subscribed, would you please do that and support this channel so that we can continue to share our journey and support you in yours. You all mean a lot to us, and we are so glad you're here. Come back again. We're going to do a passive income update as well, and we'll have some more videos coming in the future. Thanks again, guys. We're so glad you're here. Take care. Bye.